Now, let's get to Kevin Green, who joins me for a good look at some of the stories that are moving markets. And one stock that is on the move higher to the tune of over 25% this morning is MongoDB, a stellar earnings report in what Goldman Sachs called out a standout quarter. I've just been looking at some of the street recommendations as well. I mean, you've got a shopping list of price target boosts here. Just talk us through what you're seeing as far as what the report card told us and the reaction in the markets and some of the commentary coming from the analysts today, KG.
Yeah, well, you are seeing, obviously, the stock moving aggressively higher. That's after they reported earnings yesterday, beating both on the top and bottom line. They actually did see revenue coming in at around an increase of around 19% on a year-over-year basis, and they did beat the street's expectations when it came to the adjusted earnings per share. But what is also actually very interesting, if you're looking at their GAAP earnings, that actually came in at a loss of 2 cents. So if they're still on this trajectory over the next 2-3 quarters or so, Sam, they could actually be GAAP profitable, which would be a very big deal for this company moving forward. But they continue to see, obviously, a lot of demand when it comes to their Atlas product offering here. That now makes up around 75% of their total revenue. And yes, they are seeing an uptick when it comes to artificial intelligence demand, which is kind of fueling some of this to the upside here. But when you actually listen to the CEO's commentary yesterday, I heard some comments from him. He's really kind of saying that this is early innings when it comes to the AI adoption within their platform. They actually saw a lot of this growth within the quarter being fueled from European markets, Middle Eastern markets, and so on here. So the international growth story is really the driver for this name. Not so much artificial intelligence, but they are optimistic on that space as well, which is why you are seeing a lot of these price target adjustments to the upside. And once again, seeing the shares up over 25%. This is a really good quarter. Last quarter was also a really good quarter as well. It seems like their new leadership is definitely getting the job done here, and that's why the stock is being rewarded today.
Yeah, absolutely. It certainly is getting rewarded today. I mean, you've seen a lot of more bullish commentary coming from the analysts, as you say, some price target boosts here, a long list of them. In fact, I think it was interesting what Cantor Fitzgerald had to say, saying the AI tailwind is still not fully reflected in this valuation, which very much goes to show that there is still meaningful upside potential here for this stock. So obviously something we are tracking in the markets today off the back of these earnings. Switching gears to a story internationally now, KG, we are seeing some renewed concerns now in Chinese bond markets, and that is coming off the back of China Vanke looking like it's looking for an extension on one of its bond repayments here. And why this is obviously significant is because this is one of the big home builders that has yet to default. Obviously, over the years, we've been tracking the likes of Evergrande. Just give us a sense of why this is so significant and why U.S. investors should be paying attention to this story.
Yeah, well, we actually have seen over the last 2 trading sessions over in China, these banca bonds, if you will, actually dropping pretty dramatically. In fact, yesterday we saw one bond actually dropping as low as 22% on the session. So you are right. They are looking to try to have a provision within their bond offering right now, especially for domestic holders, which is a very key thing, that they want to be able to delay the interest payments on those for at least 1 year. Now, they're still going to keep the rate at the same rate right now, but at the end of the day, once again, kind of delaying those payments in order to try to avoid a default for those bonds. Now, this is actually a very interesting story because we have not talked about the China property market in a very long time. It seems like that story kind of fell by the wayside here, but is now starting to creep up. And we have not seen the government really take aggressive actions in order to shore this market up. In the past, we have actually seen nominal dollars being put to work in order to try to revive or even try to stave off some of these losses within the property sector. But it seems like they do not want to continue to have that type of behavior taking place, and they really want to see the market kind of correct on its own. Let's see if that's actually going to take place now, but it is also having an impact on China-related equities. If you're looking at BABA down over 1% today, the KWEB also moving to the downside. I'm not sure if this is going to be something that's going to be systemic throughout the global economy, but China is a huge player when it comes to consumption, not only just goods, but also other areas and pockets of the market when you're looking at energy and things of that nature. And if we do see another hiccup within their economy that actually creates a little bit of a contraction or even more of a slowing than what we are seeing right now, or a deceleration, that could also have an impact on global demand for products, goods, services, commodities, things of that nature.
Yeah, I mean, you make an interesting point. I mean, this has ripple effects into the entire Chinese economy and also the markets because, I mean, this is one of the top home builders by sales. And as I said, it's yet to default, which has been really seen as too big to fail. And you raise such an interesting point about, the government coming to the rescue here because the banks have had a tough time sort of caught between a rock and a hard place, getting pressure now from officials to say, look, help out the property sector by trying to also at the same time protect their own net interest margins. So, it's been a really tough time for them if they have had to step in and support some of these companies too. Not to mention, Vanke does have state-backed support by the way of one of its biggest shareholders, that is Shenzhen Metro. So such a fascinating story to track here. Let's bring it back to this part of the world too now, KG, because obviously we've been watching mega cap tech. Interesting moves, obviously, in recent days between Nvidia and Google last week, Alphabet, but then, of course, some of the headlines we've been tracking this week as well. We've had some worries around the yen carry trade unwind too, what that could mean for riskier assets like tech. What are you seeing out there as far as the charts?
Yeah, so if we're kind of looking at the market dynamics for today, we have around 32% of the stocks in the S&P 500 in green so far. We are seeing a lot more concentration over the last two trading sessions than what we saw last week. Now, last week we had higher volatility. Now we actually have lower volatility, and some of these Mag 7 names are starting to get picked up when it comes to buyers stepping in. Nvidia being one of them, up over 2% in the session so far. Even Oracle catching a significant bid here. So you could actually see a scenario where we have lower volatility. You have institutional traders looking back at these Mag 7 names to try to find some opportunities or even a little bit of a catch-up trade of what we've seen over the last couple of trading sessions here. Technically speaking, the MAGS ETF here still needs to really try to break above this $67.50 level and hold above that to really confirm the breakout or really try to show a similar trend to the S&P 500 just in general here. But that MACD cross with that 12 EMA above the 26 EMA is giving you a little bit of confidence that maybe some buyers can step in. So we had a broadening out market last week. Do we have a concentrated market this week where the sectors that are performing are the ones that we know and love, communication services, technology, or even industrials for that matter? That could be the case. There's probably still a little bit of risk when it comes to the Fed meeting, though. Do we get a hawkish cut? And I think that's something to keep your eye out on with volatility sitting at around the 16 level. So some really decent price action when it comes to the mega cap tech names here. Not so much in the broader market in general with the equal weight still in the negative here today, but something to keep an eye out on for the next, let's say, week and a half or so.
Yeah, and I thought it was really interesting, SoftBank's Masayoshi-san talking about how he was crying selling Nvidia shares. But as Peter Tuchman here on the floor has pointed out, it's not about what he does with his money, it's about what he says. So I thought that was a really interesting takeaway too. Hey, KG, let's switch gears to what's going to happen now, what's happening right now in the commodity space. I'm just looking at a bit of a sell-off across the metals, all but copper. That's catching a little bit of a bid, but we are seeing red arrows across oil as well, nat gas. Talk us through what stands out to you today.
Yeah, well, so if you're looking at oil, it's selling off pretty aggressively. It seems like there's other news items that I have not seen yet that's causing or creating that sell-off. We did actually see a pretty decent bid there yesterday, but maybe some optimism around the Ukraine-Russia deal is maybe providing some selling pressure there. And then when you're looking at the metals, there's a lot of aggressive speculative action on the retail front here, not so much maybe on the institutional front, but I'm actually keeping my eye out on natural gas. Reason being, we are now in that winter season, Sam, where you all up in New York probably will experience one of the bigger winter storms over the next, let's say, week or so. That was put into the forecast, and now we are seeing natural gas hitting that $4.90 level. Now, we have seen this level in the past. Is it really going to hold, just given the dynamics? That's what's going to be on my radar. Do we actually see aggressive re-rating back to the downside here, or do we actually see natural gas continuing to move higher? What's interesting about this time around is that there is more of an AI narrative or theme that's being put into natural gas as of late. You are seeing that when it comes to the energy companies as a whole, the gas service providers as well, and even when you're looking at the utility companies. So outstretched when you're looking at the fundamentals. We had a small draw last week, but outstretched when you're looking at the fundamentals. But this could be a commodity that does actually rip aggressively higher if this AI narrative still holds, and the weather also does hold up as well, as far as being obviously cold as well as providing some snow, which should create a little bit more demand there for the natural gas space.
Okay, looking across the commodity space today, and a bit of a sell-off across, as you say, nat gas, crude oil today. We'll be watching. Thanks so much for that, KG, getting us across those key stories in the market today.